Michael, hello. Dornbusch download number, I think we worked out 105.
We've sort of been toed and froed a bit for the last couple of minutes trying to work out which one we're up to. But yeah, we'll stick with 105. We'll see how we go.
We're a year older now, hey, since we started these.
Yeah, absolutely.
It's a bit scary, isn't it?
It is, yeah. It's gone very quickly the last 12 months or so. So, this game, there's always something to do, that's for sure.
Unbelievable. Changes every day, doesn't it? It's good.
Absolutely, yeah, it's good.
So I'm just going to stand here and nod today. You've got a bit to talk about, though, haven't you?
Yeah, a little bit, yeah. I mean, we could talk all day, of course, on various things, but probably one thing that a lot of people would have received in the mail in the last day or couple of days is their Telstra buyback option forms. I know, Dan, you've done a few figures on how it might
I've done a few figures. It's not very attractive, this one, Michael. Is it unlike those early BHP ones where, what was it, a 27-cent return of capital? Right, yeah, they were fantastic. Did a few figures around if today was the day they calculated the price. You know, they always take that 14% discount, don't they? I don't know why they bother giving those other options for other discounts. They always go with the largest.
Yeah.
And that brings us in with a $4.42 buyback price. So take off the capital return of $1.78. Work out the franking credit on that, and it brings us in at $5.55. So is it worth doing at that?
Yeah, it is. It's a real number crunching process, isn't it? And of course, it's really, I guess, a tax-driven decision as well in a lot of respects, isn't it? Because depending on which entity you're in or what your personal tax position will depend upon how powerful that franking rebate is.
Generally, it's good for the allocated pension clients, isn't it? But then Telstra's only guaranteed to take back 880 shares, haven't they? So it's not a big. It's not going to be big figures in any event.
Yeah, that's right. Yeah, I think the buyback in total's $1.25 billion worth, which is around about 2% of the shares that are out there. So it's going to be chicken feed, I guess, in the grand scheme of things. But certainly if you've got your form and you're a bit confused, these things are pretty confusing. Give us a call and we'll be more than happy to give you our 2 bobs worth on it.
I suppose the other way to look at that too, Michael, you know, if that brings the price down and those people chasing yield, you know, if the price comes back, they maintain their dividend, that could kick it up to around a 6.8% yield, couldn't it? So, you know, maybe it's worth having a look at buying some down there. So.
Absolutely right. Yeah, I mean, I must admit, I'd be more inclined to be buying at these sorts of levels rather than, you know, selling through the buyback offer. That's only a general comment, of course. But and I guess too, the other thing, Dan, is that, you know, the franking credit being a bigger part of the return with these things, you know, you're not going to get that credit for another 12 months, not until you do your tax return next year. So there's a delay in that, you know, a big portion of that
super return. Funds, most accountants push them back to later in the year anyway, don't they?
Exactly right. So it could be another, you know, 12, 18 months before you get that franking credit part of the return back. But of course, everyone's got different circumstances. So give us a call through and more than happy to have it.
Just talk to Andrew.
Yeah, have a chat to Andrew. He's up to speed on it all. Johnny Gouldson's pretty good on it too, I think. So have a chat to Andrew or John. Sorry, guys, to dump you in that. IAG, another one.
Not at all.
Yeah, IAG, another one, Dan, as well, doing one. I must admit, I'm not too up to speed on the figures, but again, another one if you're an IAG shareholder doing a similar sort of thing that Telstra's up
we
to.
can run through it.
Yeah, absolutely. I guess one thing, Dan, just wanted to touch really quickly on a company that I've been having a bit of a look at, Gateway Lifestyle Group. They're into these manufactured housing estates. So effectively, they've got some land and they've bought a bit of a land bank. What they do is they sell these manufactured houses, so little build-it-yourself kit sort of jobs. Put you on a plot of land. You only pay for the home value, so it's a cheaper way to get housing, and you pay basically then a weekly rent just to have your house sitting on a little plot of dirt.
So do you pay rates on top of that, or just
no rates? Just some rent, and there's no stamp duty.
So a bit like body corporate fees.
Exactly right. So it's a bit of a mixed mash between personal ownership and rental. sort of agreement. So, but they announced their result the other day, and it didn't quite hit the market. So shares dropped from 280 back to about 230, I think they are today. But they did a capital raise a little while ago, so they've got some strength in the balance sheet. Yeah, I think they've got about 125 mil sitting there for further acquisition. That's really where the growth's going to be with this mob, in further acquisitions. But paying 5.3% fully franked div. Free cash flow is very strong as well. So maybe one to have a look at, considering, the price has come off the boil a bit since the result.
So a longer term hold, Mike.
Yeah, and certainly too the general theme of ageing population, all of that sort of thing, seems to be.
So are they more targeted at that sector, retirement?
They are, yeah. It's really 55 and over. They do have a couple of holiday parks as well, but it's predominantly, this housing estate or manufactured housing estate. They're the biggest providers in that sector.
The holiday parks have a bit of an issue from time to time, don't they? When we think back to that one at Yamba from early in the piece.
Ouch! You had to bring that up. Yeah, no, it is. It can be a tough gig, can't it? Yeah. Absolutely right. Yeah. And I think, depending on what part of the cycle in, they can ebb and flow very much in that respect. Yeah. So, and just interestingly too, Dan, as well. And I guess a little bit. This doesn't affect Gateway as such, but the Department of Housing came out with a non-binding comment about what aged care providers can charge. Yep. And we saw that the market react very negatively to that. Estia, Japara, Regis, the three biggest ASX listed aged care providers really had the stuffing kicked out of them, so to speak. They bounced a little bit in the last couple of days, but there's a fair bit of government tweaking going on in that sector. But you can certainly see the effects of how the market's treated those.
It's a real tough one, Michael, isn't it? Because it's such an important sector. With the ageing population, people needing that high care, or people that are going from low care into high care as well. These are built purposely for them, aren't they? So it's something that's not going to go away. If the government get organised and so people knew where they were going, or companies knew where they were going, it'd be a different story, I think.
Yeah, absolutely. Yeah, there was a big change, wasn't there? I think July 14, or might have been July 15. I think they sort
with
of
the accommodation costs and
tried to condense all the costing to make it a little bit more simpler, but it's still a real nightmare to try
simpler in government. That's an oxymoron, isn't it?
Very true, very true. Well, I think that's about us for us today, Dan. Yeah, well, thanks again for watching, and we'll catch you next time.
Cheers.